Let's kick off with some of the assumptions and looking at the CPI figure, because we saw quite an unattractive number, if I could call it that, for December, year on year, 7.2%, but then coming back at 6.6% for the month of January, keeping rates unchanged at this point. We know there's quite a lot of caution on a global level, worries about what will happen to the US and in particular the Eurozone. One would argue that there was actually room to move here to the downside. Would you agree with that?
Well, yes and no. Perhaps more important to take into account for Namibia is the fact that monetary policy here takes the peg to the rand very seriously. So what the SAB does and the outlook for inflation in South Africa does matter. The equivalent question perhaps is, given South Africa didn't, or the SAB didn't move rates up, is it the right thing for Namibia to move rates up? With that, creating differences in interest rate could have some repercussions here and there.
Would you say, I mean, Leonard, are you saying that the next move coming through for Namibia would actually be to the upside, given the fact that we're also seeing this kind of rhetoric feeding through into South African investors' minds?
Exactly, Eleni. I think what is more important is perhaps what South Africa will do. That, by large, dictates what the Bank of Namibia decides.
Well, Leonard, given the fact that we have seen growth slowing quite significantly, and given the fact that it came through at 3.8% in 2011 from 6.6% in 2010, again, it brings up the question whether you actually look at the growth scenario versus the inflation scenario. We also know that Namibia is sitting at a far better position when you look at the debt to GDP ratio, sitting at an astonishing 27%. Relative to GDP. So it seems that the Namibian government has actually more room to move than what we see here in South Africa from a monetary policy perspective.
That's certainly true. However, I think the dilemma what we see the Bank of Namibia is whether they should target growth or inflation. They don't want to say any. Perhaps, in fact, to follow up on the first question. Does 6% or do they de facto follow the inflation band in South Africa? To some extent, they do. They seem to have some room. In fact, I would think the economy this year should perform a little bit better than it did last year. Should be a little of rebound from mining side, which was a drag in 2008. Yes, that was the case. So going forward, I think they might just be waiting on the move from the SAB. If they do move up, most likely will move up. But perhaps we'll tend to see that in the second half of this year.
Leonard, we also saw growth coming through in sectors that we don't actually see significant growth coming through in South Africa. Construction actually posted a growth number, wholesale and retail trade as well. Tourism, communications looking quite strong. And then what also is fascinating is that private sector credit extension is far higher in Namibia than what it is in South Africa, slowing to 9.8% from around 10.6% in the December month. Again, we're just looking at the health of the consumer there. Would you say that things in the economy are actually looking relatively robust at this point and are able to sustain the 6% interest rate environment? Cost of capital still not looking very expensive relative to historical levels?
That's perhaps the most important factor now. We haven't seen interest rates staying low as low as 6% in a very long time. But coming back to the state of the consumer, it's very difficult to say. But I mean, if you look, the debt to GDP ratios are not very small. But also, perhaps more important for Namibian numbers to look at the credit extension is one have to take into account that almost 2/3 of it goes into real estate. Property prices have been increasing quite significantly over the past few years, and the prices seem to be maintaining that upward trend. There are few people in Namibia who can borrow as well, so there has to be some fatigue at some point, and perhaps we're seeing now with numbers dropping a little bit down to single digit.
Yeah, absolutely. I mean, core inflation is going to be impacted by this. Also interesting, Governor Shimi is also talking about individuals and government tightening their belts. A different story to what we're hearing here, because we're taking a counter-cyclical approach. Do you think that this could actually be an option for Namibia? Do you think that it is required to try and add a little bit of oil to the engine?
Maybe, maybe not. If one looks at it from the fiscal side, we tend to see the government is in an expansionary mood. From what they introduced last year, with the medium-term expenditure framework, the expectations are they will maintain the same stance this year. Perhaps from the consumer, it was perhaps a warning that, look, interest rates have been here for more than a year now. Don't think that it will stay here for forever. We might tend to see prices going up as inflation is likely to pick up from where it is.
And the monetary policy statement also really focusing quite a lot on the global economy. And again, I allude to the fact that Europe being a very important trade partner. How much cognizance are we actually paying to this, and what is Namibia doing to ensure that it diversifies further its trade partners, so that if trouble does actually come through from the Eurozone, like we are actually seeing a bit of it, that it won't hamper economic growth too much?
Well, that's perhaps the biggest challenge here, diversification of the economy. To some extent, there has been some measures taken by the government to try and diversify, find new export destinations. But I think the real challenge, if one looks at it from the export side of the economy, the export commodities remains fairly few. You can count from agriculture, mining, perhaps major two products they're being exported. There were intentions to move into manufacturing, but it isn't that easy sector to move into, as competitiveness is something that you cannot change overnight.
So Leonard, let's get your view then. Are you optimistic about the future? Are you concerned that the global growth scenario is going to be weighed down by more troubles coming through from the Eurozone? Or are you convinced that this next bailout package that Greece has just received?
There are perhaps 3 points of importance here. First, the biggest economy in the world. If America can continue spending, we might see some positive light there. Secondly, if China can continue growing, we should see some support for commodities, and that should augur well for our export market. And lastly, if Europe remains united, of course, the package agreement signed is one thing. Whether elections coming up and post-election, the politician will keep the commitments they have made is another thing. And those are the real risks at the moment.